Hey guys, welcome. Let's give it a moment while I'm setting things up. Okay. So I'm turning on some stuff before we begin. Okay, hey. Can you guys see my screen? Can you guys see my screen? Do let me know if you can hear me too. Do let me know. Okay, let me turn off this stuff. All right. Let us begin. Okay, welcome to another Vantage webinar. Let me turn on the lights. Hey guys, welcome to another Vantage webinar. So today we are teaching, today we have an education session. We'll be teaching you guys how to master the Fibonacci retracements and extensions. This is part 2. So today it's the 8th of November and my name is Chen Yongjing and I'll be presenting to you guys for today. So disclaimer as usual. This webinar is purely educational and nothing in this webinar should be construed as investments or trading advice. So please do your own due diligence before you start trading, all right? So attendees should also note that these sessions are audio recorded and may be published in various media, including print, audio, and video formats without further notice. Okay, things are right. I was just checking. Okay, introducing the team. Okay, so we are from Everest Fortune Group, and today we are having a special collaboration with Vantage, where we are bringing you guys the good stuff. So, introducing our chief trader, we have Desmond Leong. Next, for the prop trader team, we have Cassandra and Jindao. Jindao is also our fundamental analyst. So for the investment analyst team, we have myself, Chen Yongjing, and we have Jianing. Okay, so before we begin, let me end this show first. Just a very, very quick one. Let me turn on let me check where is the meeting controls. Where is it? Okay, got it. Participants. Okay, I'm settling it. Hey, hi, Ferda. Nice to see you here. Ferda Hakan. So before we begin, so you can go Google, you can type Vantage. So you go to Vantage Market. So on Google, you type Vantage Markets. So what you will get. Hey, hi there. Nice to have you on here. So I'm still doing an introduction. So are you new here? Are you new to trading? So if you are new to trading or you are currently trading, do let me know your experience level. So so for Google, you go to Vantage Markets. So it's usually the first link, Vantage. And then you will have Vantage Markets. So we are looking at, so there's a $50 minimum deposit to start trading. Opening accounts is fast and easy. So if you want to find future webinars, educational material like this, it's under education webinars. And then you scroll down, you can see the upcoming webinars, the schedule. So yesterday we had 5 p.m. we had Cassandra. And today it's me. I'll be teaching how to master Fibonacci retracements and extensions part 2. Oh, nice, Ferda. So you are currently trading. So what kind of trading methods do you use? So well, if you want to look for past webinars, you can go to Vantage Plus. Vantage Plus. So on Vantage Plus, you click on it. So yeah, you can see that we are currently live here on YouTube, Vantage Markets. So under videos, you can actually scroll back to the past trading strategy clinics that I've hosted. So example, if I click one of it, you can see that it's me. So I actually was presenting. So you can actually have a playback here. Okay, you actually trade indexes with Fibonacci, stochastic, RSI, and MACD. Okay, perfect. It's good to know that you are using multiple confluences for your trading. So using multiple confluences, it has a better chance, since at the end of the day, trading is speculative, but with multiple confluences, we increase our confidence on the trade. So it's good that you have a trading plan in place. Okay, let's move on. Let's get right into the good stuff. So for today, I'll be presenting on harmonic patterns. What are harmonic patterns? Understanding how to read harmonic patterns, the different type of harmonic patterns, and the effectiveness of harmonic patterns. So harmonic patterns, there are many type of patterns. So later I'll be presenting them. It might be pretty technical. So if you are using Fibonacci further, I think it might be pretty easy for you to understand. It might be easier. So for the very first slide, H.M. Guthrie, this guy, he was the guy. Harmonic Patterns Foundation was laid by H.M. Guthrie in 1932. Just a very quick history lesson, and was later by Scott Carney in his books of harmonic trading. So take him as the godfather of harmonic patterns. So this guy, actually, we have a Guthrie pattern, a Guthrie harmonic pattern. Later, it's most likely the first one that I'll be presenting. So yeah, what are harmonic patterns? Harmonic patterns, they reflect geometric price structures such as retracement and projection, swings and legs, which adhere to Fibonacci ratio relationships. So in other words, retracement and projection price swings that form these patterns are interlinked together based on specific Fibonacci ratios, pretty specific. So later I'll try to draw it on charts if we have the time. So also these harmonic structures exhibits unique price movements and key turning or trend reversal points. So yeah, this factor is very helpful in trading as it provides highly trustful price entries and key levels for targets and stops. So as you know, a lot of traders, retail traders like me and you, we are using Fibonacci. Just write it down, a Fib, for those who have just joined us. So yeah, Fibonacci, you know, a lot of EAs, those kind of robots, trading robots, they actually rely on a lot on Fibonacci. They use Fibonacci. So unlike other trading methods, harmonic trading attempts to predict future movements, and this is what differentiates it from other indicators or oscillators and how they work. So we'll get right into that. So first, understanding how to read harmonic patterns. Harmonic patterns are complex and highly technical. So I don't expect you guys today that are joining in to understand. So end of this webinar, you'll be thinking, oh, I can apply this immediately. Oh, I know how to do it already. Yeah, just a disclaimer first. It's very complex, highly technical. So you need a lot of time. A lot of time. Probably might be months. So you are looking. There are many patterns such as the bat pattern, bat harmonic pattern, butterfly pattern, all kind of harmonic pattern. So all these patterns are based on experience. So later you'll see why it's technical. So it's based on experience with one look at the charts. So we might have a harmonic pattern trader. He take a look at the chart. Immediately he will say, oh, there's a bat, there's a shark, there's a cipher harmonic pattern, all kind of patterns they can see easily. Very easy for them to see. So yeah, so once a trader understands the pattern, the structure, it can be spotted quite easily. But of course, you need practice, need time. Just keep looking. Like how I use Wyckoff for my trading. So I use this other method called Wyckoff. It's also something like harmonic patterns. It's very, very technical and complex. But over time, once you start looking, it actually took me 1 year, 1 full year, 1 year to easily spot Wyckoff schematics. So I wouldn't be surprised for someone to take also another 1 year to spot all these kind of patterns, harmonic patterns. Okay, moving on. These patterns are either forming or completed M or W, or shaped structures, or combinations of M and W. All primary harmonic patterns are 5-point patterns with points XA, XA, B, C, and D. So yeah, there's actually a trading view on TradingView. You can find it. There's the XABCD. You can start to draw it out. Later I'll show it. So the price swings between these points, they are interrelated and have harmonic ratios based on Fibonacci. Fibonacci ratios help traders in defining precise turning points in these patterns. So yeah, before we continue moving on to the different types of harmonic patterns, I'm just interested whether you guys here in the chat, have you guys actually tried using harmonic patterns, or have you heard about harmonic patterns? So yeah, there are actually 5 different type of harmonic patterns. We have the different types. We have the Gutsy, the 5-point pattern, the bat pattern, the butterfly patterns. Hey, hi Wayne, nice to see you here, man. Know about M and W, nice. Okay, that's great. Nice to see you, Wayne. So we have crab. We also have crab. We also have the cipher pattern and also the shark pattern. So quite a lot of things to cover today. And I explained earlier, I don't expect you guys to be a professional just after this webinar and know how to apply it immediately. I myself, I take some time to take a look at it. So yeah, with the first pattern, it's the 5-point pattern. All 5-point harmonic patterns have similar principles and structures, and they differ only by the ratios that are used to identify them and locate their key nodes X, A, B, C, and D. Okay, the 5 points harmonic patterns have a critical origin X, start with X, followed by an impulse wave, XA. Then it's followed by a corrective wave to form the I of the pattern at B, completing the AB leg. Then followed by a trend wave, BC, and finally by a corrective leg, CD, that ends around the potential reverse zone. What do I mean by potential reverse zone? For price to head up, reverse back up. So yeah, if you want to screenshot, please screenshot it down. I'll use the eraser. I'll erase all inks. Let me get a moment. Erase all ink on slide. Okay. So please screenshot this before we continue. Just a quick one. You can take your phone, take a quick snapshot. Okay. So let's continue. Okay, we have the bullish Guthrie pattern, HM Guthrie. Let me get the pen out. HM Guthrie. Okay, this was first outlined by HM Guthrie, the man himself. The Guthrie pattern is probably the most known harmonic pattern. After the impulse wave XA, the corrective leg should end at 61.8% retracement of XA. So the corrective A to B, this part should be 61.8% Fibonacci retracement of XA. Point C falls anywhere between 38.2%. So it can be 38.2. Okay. Then I need to, my mouse slipped, so I need to draw it out again. Draw it out nicely. So it can be between 38.2% to 88.6%. Retracements of the corrective leg AB. So C is between 38.2 and 88.6% Fibonacci retracement. Okay, this pattern is completed at point D that will be located between 113 to 161.8 projection of BC. So BC, if you draw a Fibonacci line from bottom B to C, so we have the projection area. It's at, let me write it down. It's a bit confusing. It might take a while. Okay, 113% and 161.8%. Okay, long positions should be considered after a clear bullish reversal. So you can have your entry level there, as outlined here, entry level there, with a stop loss placed beneath the potential reverse zone, the PRZ zone. And your target one for this pattern is at 38.2%, 38.2% retracement of A and D. So it's pretty confusing. So it might take a while for you to slowly understand it. 38.2% of retracement of AD for target 1, and for target 2, it extends towards the 61.8% retracement. Let me get an eraser. Let's clear this out. Okay, so yeah, please screenshot this down. Please screenshot this down before you continue. So I'll write this down. What is PRZ? It means potential reversal zone. So yeah, the potential reverse zone, it's the green color box on the charts, green color box on this slide. I'll be using the PRZ term quite a lot, potential reverse zone. So yeah, please screenshot this before we continue. Give you guys 10 seconds, a quick snapshot will do. Very fast one. By the way, just interested, where are you guys tuning in from? So yeah, for me, I am from Singapore. I'm in Asia. We are a very small country. So yeah, where are you guys from, man? Tuning in from around the world, watching me. So yeah, let's continue. Okay, moving on to the bearish Guthrie pattern. If you noticed, it's a flip. You flip it around. It's almost the same thing. Instead of longing, you are just shorting. So yeah, the bearish Guthrie pattern is exactly the opposite of the bullish Guthrie. After the impulse wave XA, the corrective leg should end at 61.8% retracement of XA. So this line should be 61.8. So now we are going on to point C. Point C falls anywhere between 38.2% to 88.6%. So I will just write it down. A very, very quick one. 88.6% of the corrective rate A, B. So you draw a Fibonacci line, you will get that. So let me get the eraser out. Okay, next. Okay, this pattern, as usual, it always ends and it's completed at point D. That will be located between the 113% to 161.8% projection of BC. So you draw a projection line A, B, C. So you'll get it. It's right here. Projection. So you can actually search trading view, the projection line. So it's at 113%. So I think I draw it a bit too low, 113%, and 161.8%. So this area is the reversal zone you are looking for short. So just remember, a pattern is just a pattern. The pattern is giving you an idea where price might go, but it's due to your own due diligence that you are looking at the smaller time frame, looking for a confirmation entry. Smaller time frame confirmation entry. Okay, short positions should be considered after a clear bearish reversal at this area right here. I might have dropped something. You apologize. Okay, targets 1 for this pattern is at 38.2% retracement of A to D. Take note, A, D. Take note of it down. Then while target 2 extends towards the 61.8%. So please screenshot this down before we continue. It's quite complicated. So you later on, you'll just notice that the charts look almost the same. The shape looks almost the same, but the Fibonacci ratios are different. So yeah, I'll give you guys 10 seconds to screenshot this down, and then I will clear this entire chart, and you guys can screenshot once again a clean chart and a non-clean PowerPoint slide. Okay, I'll clear this chart now. Let me get the erase or ink. Okay, now it's a clean PowerPoint. So you guys can screenshot 10 seconds, a quick one. Okay, let's continue. Okay, I think I should ask you guys screenshot first, right? Before I ask you guys screenshot at the end. So yeah, screenshot this first. We are moving on to the bullish bet pattern. Okay, just to let you know, the bet pattern is the most accurate pattern. Most accurate. The most accurate pattern after the impulse wave XA. The corrective rate should be at either 38.2% or 50% retracement of XA, with 50% being the ideal. So the 50% is the ideal one, but it can also be 38.2%. If you notice just now, the Guthrie is at 61.8%, but for this, it's 38.2 or 50% Fibonacci retracement. 50% is the ideal one. So I'll just highlight it. Okay, point C falls anywhere between 38.2% to 88.6%. So I'll just write it down. Quick one. I think I'll write it side by side. 38.2% to 88.6% is for retracement of the corrective leg AB. So just asking, so far, is it confusing for you guys? Is it hard to understand, or Any feedbacks so far, do let me know in chat, in the questions. Just ask it. Let me turn on the chat. See whether you guys can chat. Okay, to everyone. Hey, hi. Hi, guys. Hey, can chat. I turn on the chat already. You guys can talk there instead of typing in the question and answers. Chat here. Wait. Chat here. Okay. The pattern is completed at point D. I think point D is missing. Points D that will be located in the PRZ zone, the potential reversal zone, around 161.8%. So I'll just draw it out a quick one. Points D is located at 161.8% to 261.8%. However, the 88.6% retracement of XA, so you're looking at XA now, the 88.6% retracement of XA is the most important level in the potential reversal zone. Long position should be considered after a clear bullish reversal over here at this area right here, this box, this green color box that I'm highlighting it, with a stop loss placed below the PRZ zone, potential reversal zone. Target 1 for this pattern is 38.2%, while target 2 extends to the 61.8%. So yeah, please screenshot this down before you guys continue. Quite a lot of patterns, with the bets one being the most accurate. Screenshot this down before I continue. So yeah, today is really, really very technical. It might be mind-boggling, Wait. Okay. Yeah, I'll clear these charts. So in case for those who have missed out. So erase all ink on slide. You guys can screenshot this down. So yeah, it's pretty nice. It might take some time, as I mentioned, taking some time to look at the charts to spot it out easily without drawing the Fibonacci ratios. Same goes to the Elliott wave. Also, for Elliott wave, you have to draw a lot of Fibonacci, but for those experienced in Elliott wave, they just draw it out. They draw it out like it's nothing. Don't need a confirmation. Maybe they draw once in a while just to check. Give me a moment. My specs is a bit dirty. So yeah, moving on to the bearish bet pattern. Is opposite, as you can see again, but the Fibonacci ratios are, more or less the same. So I'll do a quick one. The bearish bet pattern is exactly the opposite. After the impulse bearish leg of XA, the corrective leg should end at either 38.2%. Just like I mentioned, it's the same one, 38.2% or 50%. With 50% being the ideal alignment for the bearish bet pattern. Point C falls anywhere between 38.2% to 88.6% retracement of AB. I think I should highlight it out here instead of drawing on a chart. The pattern is completed at D right here. That will be located in the potential reversal zone. Hey, hi, Trunk. Nice to see you again. I think it's been a while. Hi, Trunk. Nice to see you, man. So yeah, I'm actually presenting on the harmonic patterns. It's pretty technical today. Quite technical, very complex. So do take some time to sit back and, try to absorb it. If not, you can't really understand, do let me know in chat or screenshot it down. You can do some research after this webinar. So yeah, as I was saying, okay, is completed at D and it ends around 116. Let me draw it out. 161.8% to 261.8% projection of BC. So yeah, your short position should be considered after a clear bearish reversal with a stop loss placed above the potential reversal zone. Targets 1 for these patterns is 38.2%, with targets 2 being 61.8%. So yeah, looking at the smaller time frame, maybe you can use just an example on the PRZ zone, smart money concepts. So let's say we are in the PRZ zone right now. So what we want is higher high, higher low, higher high, and then a lower low, lower low. That's when price can continue reverse back down. So I like to talk about this area. You can take a shot right here with a potential point of interest. So that's why I actually use smart money concept, some kind of reversal. You guys can maybe use that, or you guys have some kind of method. Fibonacci, stochastic, RSI, MACD. Use some kind of confirmation for that, adding confluence to your trade. So I'll give you guys some time to screenshot this down before we continue. Okay, let me clear out these charts. Clear this out. Let me clear it out. Erase ink on all slides. So yeah, for those who have just joined us, please screenshot this bearish bet pattern. Just do take notes of all the words underneath it. So yeah, it's pretty complex today. Okay, without further ado, let's continue to the bullish butterfly pattern. So yeah, the butterfly pattern requires a retracement of the impulse leg XA. You notice we use XA a lot, impulse leg XA, by precisely 78.6%. So this is very precise, 78.6%. This one is precise. Has to be. That's the key word. Well, point C could retrace anywhere between 38.2% to 88.6% of the corrective leg AB, including all ratios that fall between these two constraints. Oh yes, the pattern is completed at point D, right here. That will be located between 161.8% to 261.8%. Projection of BC. Just do note all these areas now, they're highlighted. Also a 127% to 161.8% projection of XA, with that it defines the potential reversal zone. So the PRZ zone is somewhere here. So I'll just draw it out. Okay, I think I highlighted the D out. So let me get the eraser. So yeah, this area is the PRZ zone reversal. So your long positions should be considered after a clear bullish reversal. Stop loss below the PRZ as usual. Target 1, 61.8%. Retracements of CD. While target 2 extends towards the 127% of CD. So yeah, just to let you guys know, if it's like 127% above 100%, you normally call it the Fibonacci extension. If it's negative minus 27.2%, all those numbers, it's called the expansion. So it's extension and expansion. Let me write it down in chat. Extension will be like 127.2%, 161.8%. So expansion is like minus 27.2%, and minus 68.8%. Something like that. So yeah, negative is expansion, positive is extension. So yeah, please screenshot this before we continue. So if I'm not wrong, we are only on the third harmonic pattern. There's quite a few. Okay, nice. Okay. Hey Wayne, by the way, what kind of trading methods do you use? Trung, what kind of methods do you use for trading? I think you said, do you use smart money concepts in the past? I think we had this topic before. So how long have you guys been trading, by the way? Candle pattern. So actually you look at, just a quick one, so you look at those kind of double bottom, double top, those type of formations. Head and shoulders, are those the candle patterns you are speaking of? Price action. Nice. So yeah, you probably got your support and resistance in place, trading from one area to another. Yes, Harimi engulfing candles, very nice. Pin bar candles, 3 crows, 3 soldiers, all these type of patterns. Pretty nice. Well, it works. It's honestly, if I were to give my opinion on this, it's easier. Your method is easier having candle patterns instead of harmonic patterns. Harmonic patterns, you need a lot of time. A lot of time. Measuring this, there, everything must be perfectly in place before you can trade. So probably your planning, if you are using harmonic pattern, it might take a lot of time to plan. I'm not sure if many people have time to actually sit down having half an hour to plan a trade. Hey Trung, you use candle plus RSI and try to learn market structure, but I still fail. It's okay, bro. That's why we have this webinar. It's okay to learn. Okay, just a quick one. I'll just wait. Okay, we are the bullish butterfly pattern. So yeah, just a very quick one. You guys can wait. Give me a moment. You guys can actually follow me on TradingView. So actually, there are a few people who actually contacted me after I finished my webinars, and then they have some kind of trading questions they don't know. So you can actually follow me right here on Doge Stonks. I'll try my best to answer you guys. Oh, damn. Okay, I got 251 followers. So I actually do post some outlooks. Okay, nice. My post NFP outlook. So I actually post over here. You guys can question me, can talk to me there. So this is not part of the webinar. Hey, nice. Hey, thank you, man. So yeah, this is not part of the webinar, but I actually do my best to answer you guys' questions. If you guys got any trading questions, what kind of trading methods also, I will reply whenever I'm free. Outside of working hours, at night, 9 p.m. when I'm about to sleep, I also can reply you guys. It's just my passion. I'm not taking any money from you guys. You guys can ask me for free. I'll try my best to answer. So you can send me your chart also. I'll try my best to explain to you. Hey, thanks Wayne, thanks Trung. Any questions, just do let me know, hit me up. Although this webinar and later this webinar ends, just ask me anything. So yeah, actually, if I'm free, I just post it. This is part of my own free will. I post it whenever I'm free. I'm not paid. I'm not paid for all this. So yeah, let's continue to the good stuff. So next, we are on the bearish butterfly pattern. So yeah, the bearish butterfly pattern also requires a retracement of the bearish impulse leg XA. Oh yeah, the pen is out. So we always mention XA, XA. We might not have time today to look at the charts. So yeah. How do I draw these wave patterns? Okay, I'll just show you a quick one. So let me get the bet pattern. Did I present the bet pattern? Okay, so I'll show you guys a quick one, the bet pattern. So yeah, this is one example. This is the bullish bet pattern. So we have it right here. It's pretty nice, the bullish bet pattern. So if let me get the slides out side by side. So maybe it's a bit cleaner. So yeah, the bearish, let me get it out. Okay, the bullish bet pattern. So it's 38. So after XA, it's at 38.2% or 50% retracement of XA. Okay, I think I got the wrong one. So draw Fibonacci. You can actually use this function. It's right here. It's under XABCD pattern. 1, 2, 3, 4, 5, 6 over here. XABCD pattern. So yeah, it's at either 38.2% or 50%. So you see, price is at 38.2% for the bets pattern, bounced up. And C, it ends either at 38.2% to 88.6% retracements of A, B. So I clear this out. So this was one which I spotted earlier on. I actually draw it earlier because I know we don't have time. We don't have much time. See the webinar, there's 15 more minutes and got quite a few. So I actually drew it in advance to save some time. So yeah, for the bets pattern, for C, it's at 38.2% to 88.6%. So it's between 38.2% right here to 88.6%. And that's where we have C. So this is for the bets pattern. So yeah, it's actually quite complex. I'm not going to lie, it took me a while to get it. Okay, moving on to D. Okay, D is at 161.8% to 261.8% projection. Okay, I think something crashed. Give me a moment. Okay, I think the PowerPoint crashed. Something is going on. Okay. I think it's fine. Okay. 161.8% to 261.8% projection of BC. So let me draw it out. I think is my chart hanged? Oh my. I think I might have to turn on, I have to turn on something. It crashed. I do apologize, man. The thing crashed on me. Okay, should be fine. So where was I? Oh yes, I was on EU. So I was talking about D is 161.8% to 261.8% projection of BC. Let me get this fib out. 61 point. Where's the projection? So it's 1.618 to 261.8. So you're thinking the projection might be a bit confusing. It's under right here 1, 2, 3 under trend-based fib extension. That's the tool that I'm using right now. So draw from A, B, C. 161.8% to quite a lot of settings to do. So it's from 261.8%. So yeah, quite a lot of work. So D ends between that. You can see D ends between that. And then you can look for a long position. So clear reversal. So what do I mean by clear reversal? Since we are in D, so let me highlight it out the entire area. This is the potential reversal zone that we are at right now. And then price, we are currently on the 4-hour charts. Price, let me get the line out. Price had a, what is it? Break in market structure. And then price came down. Can take a long, stop loss below the zone, take profits. So it's 1.35 area, but let me show you guys how to get the take profits area. It's pretty technical, man. I'm not going to lie, it's, yeah. So targets 1 is 38.2% retracements of A and D. So you can see 38.2%, target 1. Let me just clear it out. Target 1, 38.2%. Let me clear this out first. Okay, wait. So target 1, 38.2% right here. Price tapped. Target 2 is 61.8%. 61.8%. You see nicely. Price tapped in. Very nicely. And then it reversed back down. So target 2, this is the final target for this BATS wave. But then honestly, the risk to reward isn't that worth it. It's like 1.35. Not the best, but it's fine. So yeah, this is how you draw it. Pretty technical. This is the bullish BATS pattern. So yeah, let me continue on the, just now we were talking about the bearish butterfly pattern. So I'll just do a very quick run through since we might be running out of time. There is how many more? Let me check. There's another 7 more slides. Wow, I got to go through this fast. So yeah, just do focus on the BATS pattern. It's the most accurate one. Just to just to say it one more time. So the bearish butterfly pattern. It requires a retracement of the bearish impulse leg XA. And precisely, same thing, 678.6%. And C is at 38.2% to 88.6%. And D, the projection of BC. So as I was saying, use the Fibonacci extension. That's the tool that you are using. So it's 161.8% to 261.8% here. So after a very clear bearish reversal, you can take a short, stop loss above. Targets 1, 61.8%. Retracement of CD, C and D. And target 2 is 127%. Please screenshot this down. Please screenshot this down before we continue. I'll give you guys a moment. Hey, let me continue. Okay, so this is actually a new pattern. The crab pattern is the most recent one in harmonic pattern. The crab pattern was discussed and released in 2001. In this extreme pattern, the corrective wave AB, so now we skip the XA thing already, corrective wave FAB should end between 38.2% to 61.8%. Retracement of XA and C could retrace anywhere between 38.2% to 88.6%. Retracement of the corrective leg AB. So D right here is between 261.8% to 361.8%. Wow, it's even further. So you have to do some settings. Please screenshot this down while I'm presenting. So it's quite a lot of settings to modify. You want to find multiple patterns. Wow, I got type this, type that. But for now, maybe it would be easier. Just now I did mention the one that I was presenting was the BATS pattern is the most accurate one. So if you want to do some kind of back test, just do it on the BATS pattern for now. I wouldn't expect you guys to delve into every type of pattern, crap pattern. So yeah, the pattern is completed at point D that will be located between 261.8% to 361.8%. What's the best time frame? That's a good question. Normally, okay, for me, I'm spotting it on the 4 hours charts. So you got more time to plan. H4 charts, the 4 hour charts. 1 hour chart is also possible, but I would prefer to do it on the 4 hour charts. It was pretty nice to look at, pretty nice to spot. So long positions should be considered after a clear bullish reversal at this area right here, the potential reverse zone. Stop loss below, same thing. Targets 61.8%, retracements of CD, and the top is 127%. Please screenshot this down before we continue. Okay, let us continue a quick one. So moving on to the bearish crab pattern. So as I mentioned earlier, this area, 38.2% to 61.8% is just opposite. I'll do a quick one now since we are running out of time. There's two more patterns. So yeah, this area, 38.2% to 61.8% retracement of XA. C is 38.2% to 88.6 retracement of AB. So pattern as usual completed at the potential reversal zone at 261.8% to 361.8% projection of BC using the Fibonacci projection. So yeah, short positions should be considered after a clear bearish reversal with a stop loss placed on top. Entry, your first is 61.8% and next is 127% of CD. So yeah, screenshot this down before we continue. Okay, let me continue. Okay, next we have the bullish cipher pattern. The cipher pattern has a high frequency of appearance on charts. High frequency does not mean the most accurate. That's why I keep emphasizing you guys to use the bet. So B, it's 38.2%, 38.2 to 61.8% retracement of XA. C, it's at 127 to 141% projection of XA. And D, we end it at 127% to 200% cipher pattern. So just focus on the bets. Right now, these are the very, very complicated ones. We'll not recommend it for now while we are backtesting. So as usual, long positions should be considered at these potential reversal zones. First is 38.2% retracement of CD. And next is 61.8%. So yes, please screenshot this down before we continue. So yeah, pretty long, pretty much a lot of things to absorb today. So later I'll move back to the bet chart. You guys can screenshot this. So this is the bearish cipher pattern. I think this is the second last pattern, the bearish cipher pattern. B is at 38.2% to 61.8% retracements of XA, with C being 127% to 141% projection of XA, and D, this area right here, 127% to 200% projection of BC. So as usual, wait for a nice confirmation for short bearish reversal, stop loss above. Your target 1, 38.2%. Target 2, 61.8% of CD. Do screenshot this down before we continue. It looks the same, but once you draw it out, well, it might take some time. Okay, let us continue. So this is the last one, if I'm not wrong. Yes, the last one, the bullish shark pattern. In the bullish shark pattern after the impulse wave XA, the corrective leg should end between 38.2% to between 38.2% and 61.8% retracements of the impulse leg XA. Point C falls anywhere between 113% to 161.8% projection of the retracement leg AB. Pattern completed at D, where it's 161.8% to 224% projection of BC. Long position should be considered after a clear bullish reversal with a stop loss underneath the PRZ zone. First target 38.2%, next target 61.8% of CD. To be honest, do you think any most successful traders use most of this pattern? Well, very, very honest with you, I haven't seen anyone in real life using all these patterns. Yeah, I guess you might be right. I really haven't seen anyone that I've met using all these harmonic patterns. Most successful traders I see, they are just using RSI, MACD, Bollinger Bands. Yeah, really successful ones, Bollinger Bands, they are using that. Support resistance. So I actually agree with you. I highly doubt it too. But it works for some people. Some people have all the time in the world. They can sit down, draw out all these kind of patterns. So yeah, the bearish shark pattern. Corrective leg should end between 38.2% to 61.8%. And C, it's 113% to 161.8% projection. And D, at this area, 161.8% to 224%. It's just opposite, just flipping. Short positions considered after price reaches this area. Targets 1, 38.2% of CD. And targets 2, 61.8%. So yeah, just use confirmations before you enter. My opinion on all these harmonic patterns, it actually complicates things, you know. It complicates stuff. You've got to start drawing. I think it's right given all time and you have a lot of time, you can draw it. No psychological pressures like fear of news, fear of missing out, then these patterns are the best. Yeah, I agree. Some people, they really have all the time in the world sitting at home, then they start to draw these patterns out. But for most traders, so I know most of our retail traders, we have work. So we are working and trading. We don't have all the time in the world to spot all these patterns. That's why we are using a quick support resistance, some kind of indicators to aid us in our trading. So yeah, moving on to the effectiveness of harmonic patterns. They provide future price predictions, projections, and stop levels in advance and are considered leading indicators. They are frequent, repeatable, reliable, and do produce high probable setups. Trading rules are relatively standardized using Fibonacci ratios. They also work with other momentum indicators like the RSI, MACD, and so on. However, harmonic patterns, as I always mentioned earlier on, they are very complex, very highly technical to understand and master. The correct identification and automation or coding of harmonic pattern is difficult, very difficult to code it out. Conflicting Fibonacci retracements and projections make it difficult to identify the reversal or projection zones. Complexity arises when we get opposing patterns from different time frames. So you start to zoom in, different time frames got some kind of bad pattern. Another time frame got crap pattern. So yeah, and also the risk to reward factors for some of these patterns are quite low. So all in all, just a very quick summary on harmonic patterns. It's very technical to understand, very complex to use. So you need a lot of time to master it. So yeah, what do you guys think of using harmonic patterns? Honestly, it's fine. We're giving an honest opinion. What do you guys think of that? So yeah, let me open this up. Give me a moment. Okay. Let me check the chat whether anyone talked. Okay, yeah. So yeah, I agree with you, Chang. I really agree with you on what you said. Highly doubt people are using it, the very profitable ones. Maybe they are, but I don't see any of them in real life. If they are in real life, I might let you guys know in the future if you join the webinar. Other than that, if there are no further questions, I do thank you guys for taking your time to join this webinar on harmonics. Okay, you said you'll use it for stocks like Apple with movement less, faster to backtest. Sure, can do it only 4 hours. So good luck with your trading. Thank you very much for joining me today. My name is Chen Yongjing, and I hope you guys have a good day. Safe trading out there, and no problem win. Just all the best to you guys trading. Stay safe. Remember to backtest all these kind of methods that I've presented. Maybe check out YouTube, or you can contact me on TradingView. I'll try my best to answer you guys. If not, bye guys. Have a good day, man. Andy.